It's currently $3 trillion as an industry. If I extrapolate out the rate of growth, the trend rate of adoption is twice the speed of the internet. As the internet slowed down in adoption rates because it gets more saturated, if we extrapolate the same, we get to about 4 billion users by 2030. So I think the asset class goes to $100 billion, and we're only 3% of the way there. So this is the largest, fastest accumulation of wealth in all human history that lies ahead of us. It's the big rebalancing, how everybody can get involved, whichever country you're in, however much you earn, right? So it's the big one, the biggest macro trade of all time. That's primarily my interest in the trade. The whole space is driven by network adoption. More people join the network, the more applications that get built, the more valuable these networks become. Beyond that, it's then broken down to different companies or projects selling block space. That's all they do, which is a data storage. And essentially that block or distributed ledger, they've all got a different sales approach. Bitcoin has, we're the most trusted, we're secure. Ethereum is like, we're the broad big one. Solana's like, we're the fast retail. So everyone is selling block space. But again, we're all incentivized to get passionate behind these things because of the tokens. This whole thing is being driven by a big macro trend. The big macro trend is the debasement of currency. So as liquidity gets pushed into the markets every 4 years when the governments go and roll their debts, this is driven by everything I call the everything codes and work that I did showing that every 4 years governments need to refinance their debts. And what they do is inject massive liquidity to be able to do it and try and get interest rates lower. So as we do that, it creates a perfect 4-year cycle. And it's not going to go away until we get rid of the debt equations and everything else. So where are we in the 4-year cycle? I break them down by seasons, each year being a different season. Okay, winter being when liquidity is being taken away, 2022. 2023, spring. Okay, markets stop going down. People don't quite believe it yet, but you see green shoots coming, but it still feels a bit wintry and cold and miserable. Then summer, which is what we're finishing now. Macro summer is year 3, same year as the election cycles. And then we go into macro fall or autumn. Normally it lasts until about November because of this cycle. It lasts until November, and we have different structures of these cycles. We had the last one, which it usually has a peak around tax season. So March, people have to sell some tokens to pay taxes. It falls for a bit and then it rips at the end of the year. Last time it fell 50% over that period in 2021. And then it ripped, but it didn't really extend, and everyone kind of got caught out by double top. 2017 and 13, well, they were different. They had the same cycle structure. It went to the summer, 2017, Bitcoin 10x'd from there in 4 months.
It's the same.
And that's the blow-off cycle. So we don't know what we're going to get, a stunted cycle or a blow-off cycle, but thinking about the political change and what's been going on, the probability has to be towards a blowout cycle. So that will be much higher price than everyone expects. Most people have PTSD from the last cycle, and they don't want to overextend themselves, and they're worried that they're going to be caught holding the bag, which usually means they'll sell early because the markets give as much pain to the most number of people as possible. Why in 2021, everyone's expecting 2017 to happen.
Yeah.
It doesn't. Maximum pain. Let's say we're towards the end of 2025. The US economy and the global economy's picked up. What happens is inflation usually picks up a bit, and the central banks start raising rates or tightening liquidity in some form. And that slows down 2026. Doesn't mean we get a recession, but we get a slowdown. So unless we change that dynamic, there's no reason to believe the 4-year cycle won't keep repeating. It'll stop being repeated once we break the root cause of the problem, which is demographic. Probably everything.
Everything, okay.
It almost doesn't matter, including all the dead tokens. My guess is even stupid like Luna will go up 5x. Why? Because it's now a meme about the broken cycle last time. Who knows what goes up? It gets crazy season is the point. So that Bitcoin dominance part of the cycle, that starts dropping from here. And then we start having the old season, but nothing structurally looks different. In fact, it's very similar. When you map the charts, very similar to the 2016-17 cycle and not dissimilar to the last one. You go on X and ask people where do they think Bitcoin peaks out. My guess is most answers are 150,000. Well, it's 93,000 as we're speaking. And most people are worried that it's going to peak early. So the PTSD, the collective trauma, is it's not going to go as high as you expect. I need to sell early to take some chips off the table.
Yeah.
And that's when normally you get a correction. Everyone says, thank God for that. And then it rips and everybody's caught.
So I got it.
And I've seen that so many times. It's like Oh, I sold too soon. We've got new buyers now. We've got sovereigns. We've got giant family offices. We've got Middle East. We've got US government potentially.
Do they even know about the 4-year cycle in your opinion?
Christ, I've talked a lot about it. Yes, I think a lot of them do. I think they realize it's a very cyclical asset. It's like tech stocks. It's very similar. They understand the volatility and they understand it's mainly 4 years. But there's a whole bunch of people who won't care about the pension plans because that's not their time horizon. Their time horizon is 10 years, 20 years. So they don't care about it. Most of those guys aren't really in yet, but they're likely to be buyers later in the cycle because they're not the fastest to pull a trigger. And so they might push the extended rally at the end of it as they come in. Okay, this is bananas, right? I mean, we've got Cynthia Loomis. Like, I can't wait for next year. I'm so excited. I'm like, they've all turned into DJs.
Exactly.
But the knock-on effect is more than just the US because it gives a green light to everybody else.
Except
like Australia have been dragging their heels. India's dragged its heels. A bunch of places drag their heels. But as soon as the US goes, we're all in, they'll all come. Because people sense in the end, however late you come to this thing, you still realize this is the biggest macro opportunity of all time. It's a way of making money. If you think about it, Bitcoin has done 150% annualized returns since 2012, including 3 70% plus pull downs, drawdowns. 150%. Once you realize that, if you start with some capital, what is the point of even starting a business? I mean, like all of my friends, as you know, they'll all be speaking here, Dan Moorhead, Dan Tapiera, all of these guys. We're all macro guys. We all grew up together in the industry. We've all left. Sure, you know, we use macro frameworks to understand this, but none of us trade oil or currencies or whatever anymore. It's irrelevant. This is the biggest trade we've ever been given. So there's a really interesting dynamic. I've got an asset management business called Exponential Age Asset Management, and it's a crypto fund of funds. So it invests in crypto hedge funds. Why am I doing that versus the VC? We will do VC stuff as well in a different vehicle. Why? Is because the VCs get them early, or the early stage investors like yourself. You get some liquidity and you want to take some profits in some of it. Fine. People like VCs dumping. I mean, look, everyone's incentivized to try and make money. VCs take early risk. I get it. Why people hate it is because the secondary market is too small. So if you think of the entire professional capital in crypto, liquid markets, the hedge funds, let's call them those, they manage $8 billion. In traditional markets, it's $4 trillion.
Oh, wow.
So what we've got is a mismatch of liquidity. So these guys are now getting supernormal opportunities because the VCs sell, the tokens dump 60, 70%,
80, 90%
on the unlocks. If they're good projects, that's the hedge fund's job to go and say, I like that one, I hate that one, pick them up, and then you can actually do it again. Now, retail hasn't figured this out yet because they want to buy it on the news announcement. Hey, Monad's just been launched. I buy and then it dumps. What they should do is wait for the dumps and then say, okay, where's the ruby in the dust here? What can I get? Because then you can make huge money out of them. One of the reasons you're not seeing those super high valuations yet is because liquidity has not been massive, right? The more liquidity, people earn more money, funds make more money, businesses make more money gets recycled up the risk curve, and people start taking bigger risks. So I think it's still to come, but the VC markets had no exits outside of tokens. There's been no equity exits in any project. We need Circle to go public or get bought. We need some of the, Kraken. We need some of these bigger things to recycle the VC money to then ratchet the whole space up again. And then, as you say, if we've captured a certain amount of liquidity, yes, it's increasing, but then you've sucked a whole bunch into the casino of meme coins. It takes some of that away because this entire industry trades on attention, and there's only so many of us in the industry. So let's say there's 1 million active people in the industry. Well, that's 1 million people's attention, and you've got 10,000 tokens launching a day. How much attention can we give to anything? So it really is this game of attention, and memes have got it now because everyone believes that they can make the next 100x. And so utility stuff, layer twos, nobody cares.
It's sad.
It will come back because we'll have different investors coming into the space and looking for real value. It's just, I think, the nature of where we are. I think the next stage is a lot of the application stuff, the real world assets, the deep in, getting utility, gaming, it's all to come. So everybody I know in this space, I've got to know a lot of people in the aerospace, everybody's underestimating the speed. Normally, you overestimate
the short term, underestimate the long term.
Yeah. I mean, because this is Metcalfe's law squared. This is what's known as Reed's Law. This is the fastest exponential curve humanity's ever gone through. It's happening in front of our eyes. It was only 2 years ago that ChatGPT 3 came out.
That's crazy.
And now look what's happening. It's insane. And the next models are about to come out any day now. And it's just going to keep going. The last iteration of ChatGPT 1.0, it has an IQ of 120, which is more than the average human, which is 100. But it has an IQ of 120 in every single subject known to mankind. It's a pure polymath, an expert at everything, better than the average person. Now, they suggest that, unlike Moore's law, which is the doubling of compute power every 2 years, it looks like intelligence of AI is doubling every 6 months.
That's insane.
So that means in 6 months' time, we'll have a AI with an IQ of 240, which is about as high as humans have ever had recorded. And then the year after that, we're at 500,000. And then it's like, okay, this is lower land. This is AGI. It's like, we don't understand because we're humans and we're so arrogant that we just assume we're the smartest things that ever live. That is not going to be the case very, very soon.
But how does that not scare you?
Because you can either be fearful or you can invest in your own demise. And as part of this, we talked about the agents using crypto rails, crypto rails as a way of security and truth within this world, because we're going to have to prove who's human and who's not. You may have 10 Mario bots in the future, 100, but you're going to need to prove them. And so that whole scaling of this is a huge blockchain thing. People don't know it yet. They still think it's cryptocurrencies only. There's so much to this technology. So we might as well invest in our own future, in our own demise. And my view is we've got 6 years before we break the entire economic model of the world. And I know that sounds ridiculous, but trend rate of GDP is driven by 3 factors only over time, longer periods of time. Population growth, productivity growth, debt growth. Debt growth finished in 2008, and we're just increasing debt to service old debts now. Population growth, every single major population in the world is shrinking. You happen to live in a region where it's not. And guess what? It's booming. India, booming. Why? Population growth. But everywhere else in the developed world, population. And then old people are less productive, so productivity's gone down. Okay, so that's the world we're in. And I've proven this. I use the labor force participation rate of the United States. I can use it for any country. And if I invert debt to GDP, they're completely the same chart. So debts are just a function of demographics. And so the only way to change that equation of having to refinance the debts every 4 years, that cycle we talked about, is going to be changing the economic formula. And what we're about to do is we're going to add infinite population growth. And then by the time we bring down the cost of electricity via solar, nuclear, and all the other things, plus the productivity from the AI and the robots, that productivity number is going to go la la land. So we can see economies growing at 30% a year.
And would that solve the debt issue?
Yes, because it's debt's GDP that matters.
Yeah.
Because GDP is the engine that pays the interest payments on the debt or services the debt. The issue is it may not accrue to any of us as humans. 30% GDP growth. Okay, so what do? Do you tax the robots, tax the AI? Probably.
And they get pissed off about it, and they're like, why are we paying the tax?
Well, that's another thing.
Exactly.
But this whole equation, right? So there's the economic model. I think by 2030, 2032, we don't understand. The whole study of economics fails because we can't understand this phenomena. Additionally, think about, we were talking about you build a bot that trades well. Now we can do it already, but within 6 months, I'll be able to drop it into ChatGPT and said, code a better version of this. And I want it on a different time horizon. It'll do it instantly, right? So all you've done is build a business based on attention only now. You do not have a moat in any software at all. It's the end of the SaaS business model. There is no moat. Moat is going to be community and attention, but it's not going to be in product because we can copy everything in an instant. The other thing is, and this was a great question, Beeple, the artist, asked me, he's like, Raoul, I was jokingly over a few drinks. He's like, what happens when the first person with AGI just points at financial markets? They just win the game. They become worth 10 trillion. We have to shut the markets down. I thought about that, and it's like, whether it plays out that way, we stand no chance as humans. You have to realize that's a psychology game because you're always worried that some other guy, that Lark's portfolio is better than Raoul's portfolio. And I'm like, Lark's going to make more money. And, I'm an idiot. What you need to do is stick with what you've got. As you said, you've got the tailwind of a secular bull market. The advice I do give some people like adrenaline. They like to trade. In that case, keep 80% locked away on your ledger device or wherever you keep it and then keep yourself a small portfolio of 10% or 20% where you can be a filthy degen and trade anything you want. You can hold as much Pepe as you want. You can blow up. You can do whatever. And that can appease that FOMO thing, because you can always tell yourself the lie that you're going to make this 10% worth more than the rest of the portfolio because you're the best trader in the world. You won't. You'll lose most of your money, but at least you're not screwing it up.
Key takeaway from Raoul Pal's discussion. The crypto market stands at the cusp of a historic transformation. Network adoption is outpacing the internet's growth by 2x, projecting 4 billion users by 2025. This growth follows a predictable 4-year cycle tied to government debt refinancing, creating windows of opportunity. We're currently entering the autumn phase of the cycle, historically the most explosive period. While many expect Bitcoin to peak around 150,000 due to past trauma from the 2021 cycle, new players like sovereign funds, family offices, and potentially the U.S. government are entering the space. This institutional adoption, combined with reduced retail PTSD, suggests we could see unprecedented price action. The narrative extends beyond just crypto. The intersection with AI advancement, where intelligence is doubling every 6 months, points to blockchain becoming crucial for digital identity and AI agent verification. With major economies facing demographic challenges and debt issues, the next 6 years could completely reshape the global economic model through AI-driven productivity gains and crypto infrastructure. The key lesson: this isn't just another market cycle, it's potentially the largest wealth transfer in human history, happening at an exponential pace never before seen.